Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on trading with over 190k reputation points. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. So without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is currently rejecting to the upside a quite strong historical structure level for this market. This zone was in fact acting as previous resistance starting from here, from which all these previous rejections to the downside were created. Then the market broke above that zone with this impulse, and at that point all that previous resistance was turned support here. The market just tested this previous resistance turned support and is currently still in the process of rejecting it to the upside, because in the market, previous resistance, once it is broken to the upside, becomes support. And if the market goes and retests that support, that is where you have increased probability of seeing institutional longing, which at that point further increases the probabilities of a rejection, of the probability of a rejection to the upside, which is in fact exactly what happened here in this case. So from a monthly standpoint, we are still currently in the impulse phase away from this support, and more bullish price action could be expected away from this level. So let's keep this in mind and drop down on the weekly time frame. Now, from a weekly standpoint, the price action that this market has been creating is actually very clear and straightforward. We have a market which just exited from and broke out from a very important weekly range. In fact, if we look closely, we can see that the market clearly was moving inside of this range. It had the top of the range acting as resistance at this level, and at the same time it had the bottom of the range acting as support at this level. Then the market with this candle broke above the range, and all that previous resistance was turned support here. The market retested that previous resistance turned support and is currently still in the process of rejecting this level to the upside, so rejecting this previous resistance turned support to the upside. We can also notice that we just had a series of impulses and correction being created, essentially a series of higher highs and higher lows being printed. So from a weekly standpoint as well, everything seems quite bullish. We can also notice that now the market has just created this new impulse to the upside and currently is starting to create a correction. Now, generally speaking, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see that the market has the 0.32 retracement lining up exactly here. So there is the possibility of seeing just a bit more bearish price action for the market to go and reach this zone before then getting rejected to the upside and essentially continuing the uptrend and continuing the creation of higher highs and higher lows, which is the definition of an uptrend itself. So let's keep all of this in mind and drop down on the daily time frame. Now, from a daily standpoint, I did speak about gold just a few days ago when the market was here, and I explained all the reasons for which there was a possibility of a rejection to the upside, completing this M pattern at the neckline, which is in fact exactly what the market did. And by the way, I will link in the description that previous analysis, so you can go and check it out for more free education. But at the moment, before we dig deeper into what we have here from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing. Now, if we look at the data for gold, what we can see is that with the last reports, net positions have been massively increased. We went from having essentially a 199k net positioning all the way up to now having 315.3k net positions, showing a clear increase of the net positions. And this means that institutions have been moving back to the bullish side for gold, therefore making it stronger, and now reaching 387k longs compared to only 72k shorts. This shows how institutions are massively positioned to the bullish side now for gold, so there is no surprise that the market has been moving to the upside. So let's keep all of this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So here in the daily time frame, if the market from here will create a deeper correction now, this zone here would be a very interesting area. Why is that? Because this area is the previous daily resistance from which this move to the downside was created, which now is turned support, because what we know is that previous resistance, once it is broken to the upside, becomes support. So if the market will now reach this level, since institutions are already massively positioned to the bullish side for gold, there is a good probability of seeing more institutional longing inside of this area, which at that point could further increase the probabilities of a potential rejection to the upside away from this level. So if the market corrects to this zone, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside, completing the weekly impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to the most complete mentorship program ever that I have created. You have the possibility to gain access to all the courses, the trading station software with the Telegram signals integration, one-on-one private mentoring directly with me, the COT data software that you see me use in all these videos. And if you continue to scroll down the website, past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out. The link is in description, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, if you have any suggestions on any topics or pairs that you would like me to cover in the next videos, make sure to drop them in the comments below, and I will see you in my next video.